Hey there! If you're tired of feeling like the IRS has a chokehold on your business profits, you're in the right place. I'm the Squasher of Regulatory Impositions, or the SRI for short. And yes, it's no coincidence that SRI is IRS spelled backwards. Because my mission is to help business owners like you fight back with legal, proven tax saving strategies. Let's talk about one of the most overlooked, misunderstood, and underutilized weapons in your tax savings toolkit, the California Pass-Through Entity or PTE tax. If you run an S corporation, partnership, or LLC taxed as one, and you've got healthy profits, there's a crazy powerful tax strategy on the table that you might be missing. And no, it's not a loophole. It's IRS approved and already adopted by over 30 states across the country. Let's rewind real quick. Before 2018, you could deduct all your state and local taxes on your federal return. But then came the Tax Cuts and Jobs Act, and just like that, they slammed a $10,000 cap on those deductions. If you live in California, you know $10,000 barely scratches the surface. So California fought back with a PTE workaround. And now it's one of the most powerful tools available to you. And just to keep things spicy, President Trump recently released a big, beautiful bill that proposes raising the SALT cap, or SALT stands for state and local tax cap, to anywhere from $30,000 to $400,000 a year. Sounds great, but don't get distracted. That's a future maybe for 2026 and beyond. This strategy is for your 2025 tax year, filed in 2026, and it works right now. Here's how it goes down. In plain English, no mumbo jumbo. Instead of you paying your state income tax as a person, your business pays it on your behalf. That turns into a business deduction, which means you reduce your federal taxable income. Then on your California return, you get a dollar for dollar credit for what your business paid. No double tax, just smarter tax positioning. In California, the PTE tax rate is 9.3%. Let's run a real example. Let's say your business earns $250,000 in profit. If you don't use the PTE tax, you'd pay around $30,000 in California state tax personally, and only get to deduct $10,000 of that on your federal return. The rest? Gone. No deduction. That means you're leaving $20,000 or more on the table, and the IRS is taxing you on that higher amount. But with the PTE tax election, here's what happens. Your business pays 9.3% on the $250,000 profit, which comes out to be $23,250 paid to the state. That amount becomes a federal tax deduction, and if you're in the 32% federal tax bracket, that deduction saves you $7,440 in federal taxes. So right there, you've just saved over $7,400 using money you had to pay the state anyway. Then on your California return, you get the full $23,250 credited toward your personal tax bill. If your original state liability was $30,000, that credit drops your bill to just $67.50, same total tax paid. But now it's strategically deducted and far more efficient. Now say your business earns $500,000 a year. Normally you'd owe around $60,000 in California tax and only get a small deduction on your federal return. But with the PTE, your business pays $46,500. That becomes a deduction, and in the 35% federal bracket, you're saving $16,275 off the top. You still get the full $46,500 credited on your California return, so your personal state tax bill drops to $13,500. Same tax dollars, smarter strategy. All right, so who qualifies? We got S corps, partnerships, and LLCs that are taxed as either, as long as you're paying California state tax. Sorry, C corps and sole proprietors, this one's not for you. Now let's talk deadlines. The first payment is due June 15th of 2025. This one trips up a lot of people, so let me explain it clearly. That first payment is either $1,000 or 50% of what your business paid in PTE tax the prior tax year, whichever is greater. If you didn't do the PTE election last year, don't worry, just pay the $1,000 to start. Think of it like a down payment, a way to signal the California Franchise Tax Board that your business intends to make the PTE election for the 2025 tax year. You'll make this payment on the MyFDB website using Form 3893, which is titled Pass-Through Entity Elective Tax Payment Voucher. The second payment, covering the remaining balance, is due March 15th of 2026. But if you're a cash basis business, you'll want to pay the full PTE tax by December 31st, 2025 to lock in the deduction on your 2025 federal return. So that means you'll want to have your books done in a timely fashion and have a good estimate as to how you'll wrap up the year income-wise. But if you're accrual basis, you've got a little more flexibility, but timing still matters. So what's the bottom line? This is simple, it's legal, and it can save you thousands, sometimes 5 figures or more in taxes. And as the Squasher of Regulatory Impositions, it is literally my job to help you use every tool you can to legally beat the IRS at their own game. So if you want to see how this works for you, or if you want someone to run the numbers and handle it all, I'm your guy. Drop a comment, shoot me a message, or book a call. Let's make sure the IRS doesn't take $1 more than they're supposed to. Thanks for watching. I'm the SRI signing off. And remember, smart business owners plan ahead. Let's keep more of what we earn. Talk to you soon.